The ongoing debate over the approval of an XRP exchange-traded fund, or ETF, has become one of the most talked about topics in the cryptocurrency space, with investors, traders, and analysts speculating about the timelines, potential benefits, and the regulatory challenges that may cause significant delays. And while Bitcoin ETFs have recently gained tremendous traction following the approval of spot Bitcoin ETFs earlier in 2024, and Ethereum ETFs beginning to carve their own path into the market, the situation for XRP is far more complex, layered, and uncertain, which makes it both a fascinating and frustrating case study for crypto adoption at an institutional level, because on one hand, XRP is one of the longest-standing cryptocurrencies in the market, consistently ranking in the top 10 by market capitalization, and it has a very specific utility focused on cross-border payments and institutional adoption through Ripple Labs' partnerships with banks and payment providers. But on the other hand, XRP remains weighed down by ongoing legal challenges, regulatory ambiguity, and the cautious approach of U.S. regulators, all of which contribute to why any possible approval of an XRP ETF is not only far off but potentially subject to major delays, a situation that could stretch into years rather than months. And this uncertainty is sending ripples across the crypto industry, pun intended, because while investors are hopeful for institutional products that could bring mainstream money into XRP, the truth is the barriers remain enormous, particularly when you compare it to the path Bitcoin and Ethereum took toward ETF approvals. Now, to really understand why the XRP ETF may face such major delays, we need to look back at the historical context, and it begins with Ripple Labs' long-running lawsuit with the U.S. Securities and Exchange Commission, better known as the SEC, which has cast a giant shadow over XRP for years. In December 2020, the SEC sued Ripple, alleging that XRP was an unregistered security and that Ripple conducted a $1.3 billion unregistered securities offering by selling XRP to the public. And that lawsuit instantly became one of the most critical legal battles in the history of crypto, not only for Ripple but for the entire industry, because if the SEC had succeeded in proving its case, it could have set a precedent that would have endangered dozens of other cryptocurrencies as potential unregistered securities. And while Ripple scored a partial legal victory in 2023 when Judge Analisa Torres ruled that XRP sales on secondary markets, such as exchanges, did not constitute securities transactions, the court also ruled that sales to institutional investors could still be considered securities transactions, which means the ruling was a mixed bag, giving XRP breathing room for continued trading but still leaving a cloud of uncertainty over its regulatory status. And this unresolved status is a massive roadblock to any ETF approval, because for the SEC to greenlight an XRP ETF, it needs clarity on whether XRP qualifies as a commodity or security. And until that question is fully settled, the likelihood of an XRP ETF remains low, and the delay inevitable. Another layer to this delay is the way regulators approach crypto ETFs in general, and if we take Bitcoin as an example, it took nearly a decade of applications, rejections, court battles, and immense pressure from institutions before the SEC finally approved spot Bitcoin ETFs in January 2024, and that only happened because Bitcoin had already been widely recognized as a commodity, overseen by the Commodity Futures Trading Commission, the CFTC, and not considered a security, which made it easier for regulators to craft a path toward ETF approval. And Ethereum, while still facing some questions about its staking model, also benefited from being broadly treated as a commodity, which allowed ETHs to move forward. But XRP, unlike Bitcoin and Ethereum, is still stuck in regulatory limbo, with its very classification in question. And that's the number one reason why approval for an XRP ETF will likely face major delays, because regulators simply do not want to create a precedent of approving an institutional investment vehicle tied to an asset that still has unsettled legal status. And when you think about the SEC's conservative stance and their history of dragging their feet on ETF approvals, it becomes clear that even if Ripple were to eventually settle its case with the SEC, or win more favorable rulings, the timeline for the SEC to then process, review, and consider ETF applications could still stretch for years, meaning investors waiting for an XRP ETF in the near term will almost certainly be disappointed. But the legal battle isn't the only obstacle. We also need to consider the political climate around crypto regulation in the United States, which is growing increasingly polarized, with lawmakers split between those who see crypto as an innovation driver that must be embraced and those who view it as a systemic risk that must be controlled. And with an election year coming up in 2024 and beyond, this political uncertainty further complicates the timeline for crypto-related approvals, because the SEC, as a regulatory body, is heavily influenced by both political pressure and the leadership at the top, and under Gary Gensler, the current SEC chair, the agency has taken a strict, enforcement-first approach toward crypto, pursuing lawsuits, investigations, and enforcement actions against numerous projects, exchanges, and tokens, and given this environment, it's highly unlikely that the SEC will make approving an XRP ETF a priority anytime soon, especially when XRP is directly tied to one of the SEC's biggest ongoing core cases, which means investors should expect years of delay unless there is a radical change in leadership or policy direction. And even then, the process would not be immediate, as regulators typically take years to evaluate and approve such applications. At the same time, market structure plays a critical role, and ETFs require reliable, transparent, and regulated markets for the underlying asset, which in this case is XRP, and while XRP does trade on major exchanges, it still faces restrictions in the U.S. due to the ongoing lawsuit, and many institutions remain hesitant to engage with it until its regulatory status is resolved, and without broad institutional adoption and clear regulatory recognition, the infrastructure needed to support an ETF becomes difficult to justify. And this again leads to further delays, because ETF approval is not just about the asset itself but also about ensuring market integrity, liquidity, and investor protection. And right now, XRP's markets, while robust globally, do not have the same level of institutional depth and regulatory clarity that Bitcoin and Ethereum markets do, and that's another factor contributing to the delay. Now, let's talk about investor sentiment. Because despite all these challenges, there is still enormous demand for an XRP ETF, with many in the XRP community arguing that such an ETF would unlock billions in institutional investment, mainstream adoption, and finally allow XRP to fulfill its potential as a global payment solution. And it's true that an ETF would give traditional investors a regulated, accessible way to gain exposure to XRP without having to directly buy, store, or manage the cryptocurrency, which could create significant upward pressure on price and demand. But the reality is that this demand alone is not enough to speed up the approval process, because the SEC and other regulators prioritize legal clarity and market stability over investor demand. And so while enthusiasm remains high among XRP supporters, the long wait for ETF approval is likely to test investor patience. And in fact, some analysts worry that this prolonged uncertainty could weigh on XRP's price in the medium term, as investors flock to Bitcoin and Ethereum ETFs instead, where the institutional adoption is already flowing. Globally, however, the picture may be different, and this is worth noting, because while the U.S. continues to drag its feet, other jurisdictions could potentially move faster in approving XRP-related investment products, and we've already seen countries like Canada, Switzerland, and certain Asian markets adopt more progressive stances toward crypto ETFs, which means there's a possibility that an XRP ETF could be approved outside the U.S. first, and if that happens, it could create new momentum for XRP internationally, though U.S. approval would still remain the holy grail, given the size and influence of American capital markets, and until the SEC moves, XRP will likely remain sidelined in terms of major institutional adoption. The broader implications of this delay cannot be overstated, because ETFs are not just about investor convenience. They are about legitimacy, mainstream recognition, and unlocking capital flows, and the fact that Bitcoin and Ethereum now have ETFs while XRP remains in limbo sends a message to the market about which assets regulators view as credible and safe, and this could have long-term effects on XRP's competitiveness, because as institutional money pours into Bitcoin and Ethereum, driving liquidity and price growth, XRP may struggle to keep pace unless Ripple and its partners can continue to secure major banking and payment deals that reinforce its real-world utility. And while utility is indeed XRP's strongest argument, ETF approval would have been the ultimate stamp of legitimacy, and the longer it is delayed, the more XRP risks being left behind in the battle for institutional dominance.